Welcome back to Inventory Watch. It is the first inventory watch of 2024 and January is coming in hot. Let's go over the numbers and see what we've got today. Let me get into presentation mode and present full screen. So, and as always, let me shrink my head a little bit. Cool. All right, so let's dive into new inventory because as we ended 2023, the one statement and the if statement that I had was are we going to see more inventory coming in 2024, and will the buyers come back after all those rate decreases? So let's see what's happening. Got new listings here, and what I'm seeing so far in the first 2 weeks of January, we are seeing new listings coming to the market. So new listing inventory is actually up 20% year over year. So that means the last year, month to date, we had about 2,900 new listings come to the market. And this year we're at almost 3,500 new listings coming to the market. So we are seeing more inventory this year, which is great for our market. It's great for the mojo to kind of see that coming. So the question that is on everybody's mind is have the buyers come back, and we're going to get to that. But let's talk about the January inventory target to beat if we're going to see healthy supply coming back into our market. Last year, for the full month of January, we had 7,932 homes on the market. That's what we ended the month with. And that's the target to beat if we want to see some more fresh supply coming into the market for January. If we stay on this pace that we're seeing, we are on pace for 8.5 to 9,000 new listings coming to the market just for January. If it slows down, that's going to be near this lower number of 8.5. So I'm thinking that's going to be our target. That's what we should be rounding out the month with. But anything over 8,000 is going to be great for our market right now. So that's new listings. Now let's talk about total inventory. So that's where we are with brand new listings. Total inventory, we have also seen shoot up in the last couple of weeks. When we finished inventory watch for 2023, we were at just about 15,028. So about 15,000 even in active inventory. And from November, we had started to see inventory start to wind down, right? Sellers weren't coming to the market, and there just wasn't, there wasn't enough fresh inventory. And that usually what happens in Q4 because of the holidays. People don't think about selling in their house, or if they do, they're going to wait until January, right? So we don't usually see a lot of that inventory, which is normal. We did see about 500 new homes come to the market, or not new homes, but an increase, right? Of 500. So we had thousands in brand new listings that we just saw coming to the market. And then we had, the buyers. And so that gives us that increase of about 500 homes, what's interesting here is that our average list price actually went up. We have all these new buyers coming to the market, or not buyers, I'm sorry, new sellers coming to the market. I think we have all these different price ranges and sellers with attitudes of I think my house is going to sell this year. And so I think that they're trying to test the market a little bit because we were winding down. We had less inventory and our average list price was about $612,000. And we did see that come up. These sellers coming onto the market have big goals, some lofty goals. So the listing price has started at $714,000. Now, that's not to say that prices are going to be higher. It's also because we're getting more sellers in different price ranges that we probably weren't seeing at the end of the year. So it does bring the average up, but $100,000 is a huge jump in just a couple of weeks to see the list price go up. So keep that in mind. Let's talk about pendings and contingents, because this is the one that is most shocking to me. Buyers have come back to the market. We saw an increase week over week of 5.5%. So in the first week of January, we had 2,600 pendings. And in the second week of January, we ended 2,800 pendings. And if we look year over year of where was January 1 to January, 13, 14, in 2023 versus where we are in 2022, we have more buyers this January than we had last year, up 53%, you guys. So we are starting the year strong with both inventory and buyer demand. So we're seeing the sellers are starting to come back, the buyers are starting to come back because we did see interest rates drop. And so that's pretty awesome. Kind of see this movement in the market, and it seems to be pretty healthy so far. Now, what we're seeing is that average contract price, again, $592,000. This is actually up, I believe, from like 560-ish. I'm not sure. This is also up. So the under contract price, like we have more buyers with more cash, and so they're putting offers in on higher homes, higher value homes. So we're seeing the under contract price also take a lift. So we are seeing that as well. So if you have a home that you're thinking about selling, there's probably some pent up demand from the happen of the holidays where people were just like not interested, like around the holidays or Q4, that they're now interested. And so they were waiting for the interest rates to come down, and they were waiting for the right time. And it looks like New Year was it. So we are starting off the year pretty strong, and I'm super excited about that. Let's talk about the pending ratio. So I've been reporting on the pending ratio. There hasn't been a whole lot of movement, right? So if you look back and like go through any of the other videos, for Q4, like we usually sit between 37 and 38, or maybe between 36 and 38 in the pending ratio. So just remember this pending ratio, the lower this number is, so the closer we get to 35, the more of a buyer's market we're going to be in. The closer we get to 40, the more of a seller's market we're going to be in. And so we've been just kind of riding this line between 36 and 38 and really like kind of going between a slight buyer's advantage to a slight seller's advantage. And it's just been like rocking that line. And I think we're going to see some movement in this ratio, throughout the first quarter. So I think we're going to see this start going up one way. And it just depends, right? So we've seen huge amounts of inventory come. We've also seen buyer demand come back. And so like, it just depends who's going to win that race of like, well, we have more inventory than we do buyers. And so I don't have a prediction on this. I think we're just going to watch it and see like which way inventory goes. We did see an increase in total inventory, even though buyers came back really, really strong. We did see total inventory move up about 500 houses. So there's something to be said there. And so I just can't predict which way it's going to go. But again, we will just keep an eye on it. So if this goes again closer to 35, we're going to go more into a buyer's market. Now, where we're at now with this 37.2, it says buyers have a slight advantage in some zip codes, which means in other zip codes, the sellers have the advantage. And so it just depends on what zip code you're in and what your inventory and demand actually looks like. So have for total pendings, 5,802 total pendings right now. As of yesterday, when I pulled that number, that were under contract. That's pendings, under contract, like UCB, all the different like under contract statuses. So, which is super interesting. So this is where we are sitting there. And then number of sold homes. So this one we're at and this is a lagging number. So the number of sold homes doesn't quite look as impressive, right? Because we are actually down. We are 1,500 sold in the first 2 weeks of the year, but it's because we saw that lag in December. So remember, like closings happen about 30 days out from the time they actually go under contract. So these are all of the pendings from like December and possibly some from November that are just starting to close now. And again, it was real slow then. So we're going to see this. This is a lagging indicator. So we're going to see this kind of be slower until like next month. All of these ones that are going under contract now, we're going to start seeing those closings pick up, which is great. So in January, the number to beat for 2023, if we were being competitive here, is that in January 2023, we had 4,350 homes closed. And so the number to beat for 2024 is 4,350. So are we on target for that? I don't think so. So I think February and March will be the ones that like we may want to beat, because we are seeing 53% home buyers coming back in the first 2 weeks of the market, which is amazing. So the market has been very fluid. We've had some more liquidity, right? More product and more demand. And so we're starting to see that in there. Will it last? That's the question, right? Going into 2024. So that's the question. So follow Inventory Watch, make sure you set your alerts so that you get these videos to understand, like, is this trend going to last, first quarter of 2024. So let's go into mortgage rates, because this has a huge play onto what's been happening in the market as far as buyer demand coming back. I think buyers got a little scared there towards the end of last year. Interest rates peaked at nearly 8%, and they were just like, whoa, that's too rich for my blood. And they kind of stepped back, and they stepped back for all of Q4. Like we just all pull back of buyer demand, and usually what happens is that inventory actually starts to kind of dip, and we saw it continue to rise right up until the end of the year, which is not usually what happens. And so like that means like buyer demand had fallen, but we're actually starting out the new year, these lower rates, and this is what the buyers are like, woohoo, we can kind of jump back. There's more affordability now that the rates have come down a little bit, and pricing, came down to Q4. Q1, we did see pricing go up. Q1 and 2, we saw home pricing kind of jump because there was so much buyer demand again at the beginning of last year. And then the second half of the year, we saw pricing come down because interest rates were so high. So now that interest rates are lower, are we going to see the same trend as we did last year of where, home pricing might go up for the first half of the year and then kind of weighing down? That could be, we could see a repeat of 2023 there. It just depends on what these interest rates are going to do and how much supply actually comes back to the market. One of the things that I'm still concerned about is the economic health of the population. And so I'm still seeing, even though we did start this out as such a great start to 2024, I am still seeing and hearing in the numbers that bankruptcies are starting to trend up. Credit card defaults are starting to trend up, as well as job layoffs. Every time I open, the news app on my phone, it's like Google just laid off, so-and-so just laid off. So the big tech companies are starting to lay off. And so that we have to take that into consideration of like why there's supply coming. And so to me, I'm still watching that very carefully. I think there are people that are like forced equity sell of like, I have to sell my house because I got laid off and I need to pay off my credit cards. I need to get out of this debt. And that is the one like asset that they have that is very, very liquid, right? Some people don't play in the stock market, or they don't have other assets to sell off. And that some people, the house is the only thing that they have. So we have to take that into consideration when we're looking at the supply side going into 2024. Because remember, during COVID and for those couple years, foreclosures were under moratorium, like they weren't happening, and now they are back in our market. And so that's going to be something that we have to take into consideration for 2024, is that people now, the bank will actually foreclose on the house if something were to go awry, which means that they could be bringing it to the market and we could be seeing that supply more. So we still have to take that into consideration, even though this, the first 2 weeks are like, woohoo, starting off great. And we have more liquidity in the market and we have more buyers and we have more inventory. We just like, if inventory gets out of control, like that is not going to be a great thing. So we need to keep an eye on that and see kind of where that's going. So that's interest rates. And that's my talk about the economy. Let's into the rental market. That's showing some interesting things. So we're not seeing the same like woohoo in the rental market as we're seeing in the home buying and selling market. New listings are actually down 4.7%. So landlords are not bringing their listings to the market right now. And I think, I don't know why. I'm not going to speculate right now, but I have some theories happening in my head. And until I have some data to bring to you guys, I'm just going to keep it to myself. But we have less inventory coming into the new year. We did see the second half of 2023 that rent prices had started to drop significantly because inventory was starting to stack up and there was more rentals, and renters were just not coming to the market. They were like, oh, too rich for my blood. I'm not doing this. And it really put a squeeze on landlords to start dropping prices. Now, I think Okay, so maybe I will share. Okay, so I think that some of the landlords are not bringing their homes to the market, and the people who can make that decision, right, are going to be those institutional landlords of like, maybe we'll just hold off and maybe we won't bring these. Maybe they're not bringing them to the market because they're selling them. I don't know. I don't have the data on that yet. Have to go look at that deeper. But if they're offloading some of their inventory, yeah, that would make sense that our new listings are coming down. If they're not offloading it and maybe they're just holding it until like a different time, and so because they can, depending on like when they bought that one, but it's pretty low. And so that's my theory, and I'm not sticking to it because I have no data to back it up, but something's happening in the rental market, which is going to be good for, I guess, the home buying market, because what this is doing is now putting a squeeze in the opposite direction where there's not enough rental inventory, and like the demand that we have will absorb it, which means that rental prices could start to go up in the first half of 2024. So we have seen in the last few weeks, like, renters are coming back to the market, probably because this is a popular time. The first quarter is a popular time for people to move. And so their leases are ending. They have to go find a new lease, and home buying may not be an option if the market is still kind of priced at a premium for buying, right? So this, I would imagine we will continue to see ramp up a little bit with renters coming and looking for leases. And if the supply side stays constrained, we are going to see prices go up, because whether people are putting their rentals on the market instead of renting them, or they're holding off because they know something, they know about supply and demand, and they're like, I'll just wait a couple of months to put this back on, and they can hold it, right? If you're an institution, you can probably hold it for 2 months and jump it in right at, peak supply time. So there's things, right? So concerning the rental market, it was concerning to watching it drop so much, right? Because if rents got so much cheaper than housing, then that would really stagnate the housing market, because, if you can get a rental for $1,400 and your mortgage, if you were to buy, was, $2,800, like, it's a no-brainer for most people that, like, hey, maybe I'll just rent for a couple of years until home prices change, right? Or until I make more money that I can buy. So something to be said in the rental market and what's happening there. I do think that we may start to see like the rents kind of bottomed out, and I think they're going to go back up just based on what I'm seeing now. The rental pending ratio is about 8.7. So we'll keep an eye on this. Again, the higher it gets to 10, like, we're going to be in the landlord's favor, and the closer it gets to 5 or 6, like, we're going to be in a renter's favor. So that's kind of where we are now. I did kind of put in where, like, this increase, like we saw the increase to $2,369 as the average rent when we were ending in, the past 2 weeks of what's actually closed is at $2,300. Now, if you've been following the rental part of this for the last couple months with me, that rents actually bottomed out at like $2,230, I believe, or 22 something. So they were starting to come down, and now they're starting to go up. And it's actually concerning that we are actually entering 2024 higher than what we entered 2023 with. So seeing that, and we have the rental market is still pretty supply constrained right now, and that's really interesting. So if you were squeezed out of the market at the end of 2023 because rents were coming down, and you may have got scared and put your home on the market, maybe you could take it off and add it to the supply. There seems to be demand seems to be picking up there. So that's what we're seeing there. I think that's pretty much so this is where we ended December rents at $2,257. So, and we peaked in mid-July at $2,400. So again, we might see a repeat of demand going up in the first half of the year, and we could see this repeat of it just kind of waning off into the last half of the year, because this is 2023. So that's all I got for you guys. Thank you so much for Inventory Watch. Keep an eye out for the next one, and we will see how this year goes.